Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is January 4th, 2018, and I thought I'd take a look at crude oil today. I know I did it just a couple of days ago, but things are changing still further, and I just want to give you an update. As far as the trend, no surprise here, short, intermediate, and long term are all pointing to the upside, and the technical rating is still pointing to the upside, but we have a pivot high that has just recently triggered, meaning today, and I want to show you on the Deep Dive patterns that a couple of things have just recently happened. Here's crude again, and we had a surge high, and we had an EQ high, which stands for earthquake. And I want to go into a little more detail since we can actually show this on the screens here. So if we take a look at crude oil itself, here's daily bars for crude oil. This is today's action right here, and I know it's kind of faint, but there is a little circle right there. I'll just highlight it here, and you can see that the bottom there, it says earthquake, and that's something that typically happens when the market gets violently overbought or violently oversold. And when we have that type of a condition, strange things will happen. Now, you can see the support to the market here that we broke through a little while ago, and that support right now is at 59.06. We had some further support at 57.68, and then the other primary one, 59.07. So that was the major support here that we broke through, and it's the volatility, the thrust has still continued. And what we want to do is to really get a feel for this. If we take a look at, as an example, the weekly charts, if I can pull it up here, you can see here are those resistance levels. You can see that today's action on the weekly chart is broken above, and we did it basically just the other day, or the last week or so. And if we continue to look at this, you can see that there was tremendous resistance to the market to breaking through that. Now we've broken above it. We have resistance to the market. This is on weekly bars, so the numbers are going to be a little bit different, but 17 on a weekly chart is still very strong. 50 is still the strongest, but here is a 17, and that in this case, that's a blue line. We're coming up to it. So the blue line in this case represents resistance, given where we are right now. That's at 66.90. If we take a look at this little 10 here, that is at 68.59. So because we had the earthquake that just is triggering now, earthquakes are an environmental indicator, and because of you can see here under the environmental change here, that whenever you have that type of a condition, either A, the market is going to shrug it off and do a complete about face, and I'm going to show you an example on that. In other instances, you can have the market you would think would reverse back to the downside because it's severely overdone, but in some cases it is just a crescendo effect that is earth-shattering, hence its name, earthquake. And what will happen is that there's a continuation to the upside. So the way that I'm viewing this, that if you look at it on a weekly bar, there really isn't too much that is preventing it from being able to go up to these levels that I was talking about here, the 68.59 level, and then up to this level of 82. And if we theoretically are going to go back, and this is a continuation chart, I mean, we could theoretically come back to this major 50, which is at 100. Now, I'm not calling for that right now, obviously, because you'll see that we're actually short the market, but on a daily bar basis, we are looking at, if I can find the right one here, some really nice support to the market. If I can shrink this up a little bit with where we are right now, we're still going to be looking at these levels over here, 66.78, this 50 here, and then this 68.59. So there's still a lot of upside potential. And whenever you have an earthquake, it is genuinely, I mean, it's really hard to get a feel for where the market actually wants to go. So I'm going to show you two examples here. Here, back in time, I'll give you the date here, 7/17, basically July of 15, we had an earthquake. The market came down, it was severely oversold. It took a bit of a breather, and then there was a continuation. We've also have another case, and these don't happen all the time. If I can find it here, here it is, right here back on 8/9 of 11, where we had a more of a crescendo effect, where the market came down, it had an earthquake formation. The market bounced up, came back down, and we eventually found support there, but it was a violent condition, and you can call this, even though it's a trading range, you can say that it was obviously a trendless type condition, and that earthquake was earth-shattering enough that it actually abruptly stopped and then eventually formed some type of a consolidation before the market rallied again. So whenever you have these types of conditions, they're dramatic, and you just never know exactly how things are going to play out. So if I come back to the website, I just want to show you how we're trading this right now. As of 5 o'clock when I'm doing this particular presentation, this deep dive, we have two short positions. We have a 120-minute short position that established today. It's got a little bit of a loss. We've got a 45-minute bar system, again, short the market as of today, and also with a small loss. But what did take place today is that the systems, I'm just going to come to the exits. You can find this any place on the site. Come to crude oil, and what basically took place is that we were able to liquidate a lot of positions over the last couple of days. We had 3 that liquidated today with some nice profits, and then we had 2 positions that liquidated yesterday. You can see the dates and the times where these actually did liquidate themselves. So the way that we're trading this particular earth-shattering earthquake formation, I'm going to pull this so that it's more up to date here, is we are short the market. Just with a couple of contracts. We've obviously liquidated a lot of our long positions. When I did the deep dive a couple of days ago, we had been short and we were looking for a retracement. The markets went long the market. They flipped out of their shorts, they went long, and today we then again flipped out of our long positions and our net short here at call it the 61.89 level, where the market is right now. So the way that I would be playing this is to follow the systems, hoping that there's going to be an abrupt reversal. Chances are that it's not going to be as abrupt as we had back in 11, that it's going to come down dramatically, because there really isn't a lot of resistance to the market, so it can still meander up to the 68 level. Obviously the systems, if that should take place, would flip again. We go from short back to long. But the seasonal tendencies are still pointed to the downside. We still have some support that we really want to retest here, and that's kind of the way that we're playing this right now, to see as whether the market can come back down, test, and then perhaps to have some type of a rally into maybe mid-January, maybe later January, and then start to rally from there. So it would be nice for it to retrace a little bit, but it's the earthquake formation that, quite honestly, almost anything can happen right now. So take all of this with a grain of salt. What you really want to be doing is taking profits while you're able, which is what took place with the systems today and yesterday. And just be very, very cautious here, because the violence that we're seeing here in the market is probably going to continue. Either the market moves sideways and then we have another surge to the upside, like I showed the one example on the short side, obviously, but the market can do an about a face, and you're just going to probably see excessive volatility here until we do a proper retest of this level right through here. So there was just so much resistance to the market. I'll use this 50 level right here as the major number, 5907. And I believe this was 5906, so they're virtually the same. There was just so much pent up energy to penetrate that. In many cases, you'll see it come back and retest, and we'll see how things kind of play out. So for right now, the systems are short. They liquidated their positions on the long side, and we're just on a wait and see. But always be cautious. It's there for a reason. Whenever we're talking about the earthquake, in this particular pattern, anytime in this column you see an earthquake, yes, it's on the high side because it was done on a volatile surge to the upside, but just bear in mind that earthquake means an environmental change and something that we really want to be cautious of. So if you're faint of heart and you're trading, this probably is not the market to be trading right now because almost anything could be happening. But for those of you that trade on a regular basis, this is nothing new, and just watch your positions very closely. We'll take a look at another market tomorrow. I do want to point out before I leave here that we had a lot of signals that have occurred here in the last couple of days. This surge thing, that's just profit taking in a lot of different types of phases of these different markets. So do watch over these things. I don't have to point out every single market, and address every single little blip that occurs within some of these patterns. But do realize that there's been a lot of action as of late, a lot of money to have been made. The systems as a whole have been doing quite well, and it's probably time for hopefully a little bit of a breather, a little retracement in crude oil, and then we'll recalibrate and go from there. Thanks for watching. We'll talk soon.